Good morning, everyone, and welcome to the Multnomah County Board of Commissioners Board Briefing. Audience members, I want to start by asking you to please silence your electronic devices. For those presenting today, please turn your mic on when you begin speaking and off when you've completed your remarks. And for all presenters, please state your name for the record before speaking or responding to questions. Our first briefing this morning is the Supportive Housing Services forecast. And we have some folks here from Metro who are joining us. Josh Harwood is the financial, I don't actually know your CFO. Let's say that, Josh. And then following Josh's presentation, we'll have a briefing from our Homeless Services Department. They'll provide an update on the department's financial outlook for FY27, as well as their current priorities in the budgeting process. I think we all realize we have very difficult decisions to make for the upcoming fiscal year, and some of the hardest decisions we'll have to make concern our investments in homeless services. Those investments are currently sheltering and housing more people than ever before, which is great. At the same time, we know that thanks to the data improvements the county has delivered on, that more people continue to become homeless over those who are able to end their homelessness with housing and services to help them remain in that housing. In other words, each month, the inflow of people into homelessness outpaces the outflow. This financial overview will set the stage for those challenges ahead as we work to reverse that trend. With that, I will hand things over to Josh Harwood, who will be followed by our Homeless Services Department Interim Director, Anna Plum, and her team. Good morning, Josh.
Good morning, Chair Peterson and Commission. I'm Josh Harwood. I lead the Revenue and Analytics Division at Metro. Here to talk to you a little bit about Metro Supportive Housing Services tax revenues. This is a forecast that we provided to your finance group in early December, and have subsequently talked with oversight committees and the like about the forecast. So I'll hit the high levels as we go through. But I think the important thing to remember is that when a tax is first created, we have to learn about the tax. And I think we were pretty open about the fact that we didn't know a whole lot when we started this. We knew that it was going to be volatile. We knew that it was going to have some surprises involved because we know a lot about income taxes. We operate in a state that has big kickers and large deficits. And so we're operating in that same kind of environment. So next slide, please. So the key takeaways from where we are right now is simply we're getting more and better analysis. Our colleagues over at the City of Portland have worked very hard to get us more information and different information that we've asked for. It's been hard at times, but it's been a fruitful discussion, and I think we can see the results in some of the forecasts and the analysis that we've done. So as we move forward, though, I want to make sure that volatility is still going to be part of the story. It's a word that I talk about all the time with this. And when I talk about volatility, I don't just mean year-to-year volatility. I don't mean like 1 year it's going to be 300 million, 1 year it's going to be 400 million. I mean, in October, we got $40 million in unexpected revenue from past year receipts. Those surprises can be positive and negative. So we also could have big refunds some year. We don't really know what those companies are trying to do or the individuals are trying to do with their taxes until they do them. So we're trying to, so even with better data, we still have some ups and downs. And then the third point is just the regional economy is in a place that it hasn't been in a long time. Typically in Portland, at least since the 80s, the early 80s, when the economy expands, we do better. And when the economy falters, we do a little worse. We're a little bit more reliant on manufacturing employment. And so as a result, when the macroeconomy falls, demand for fewer products from our companies here, and we just do a little worse. This time, the national economy is growing. We can talk about why and how resilient it is, but it is growing and we are not locally. So that's produced some really low investment levels, which gives us some pause for future years of this tax. So next slide, please. I want to give you a little bit of a sense of what our process is. And this is a process that was born out of a discussion with the counties, your financial staff, as well as Clackamas and Washington County's financial staff. This is a process that is embedded largely in our IGAs. So you'll notice in early December, we provide a 5-year forecast. That's what I'm here to talk about today. We get a financial review team update later this month with, we'll have all of the fourth quarter receipts and the initial look at what's happening during tax season, but not anything meaningful probably. And then we'll provide a forecast update in March. The counties decided that's what they wanted the last kind of contact to be before budgets are decided. I will tell you that in March, we rarely adjust the forecast, and we probably will rarely adjust the forecast. We don't get a lot of new information between November and March. And then we have another update after tax season, and then we do our year-end report in August after the books close. And I think those documents I've sent over with these slides, both the 5-year forecast and the year-end report, as examples of kind of the analysis that we're doing as we go through the process. Next slide, please. So it's not necessarily exactly it doesn't necessarily exactly, when we get information, it doesn't exactly line up with when we need to provide it for you. And so this is when we get new information, just to give you a sense of it. We get quarterly information from the city that is very, very comprehensive. So we can look at individual taxpayers if we wanted to. We don't typically, with some obvious, or with some rare circumstances where we need to. But generally we get new data as the tax season progresses. So for our taxes in April, most of the taxpayers with the highest liabilities, so the people that write us the biggest checks, are filing extension files. So we don't know for sure what that income is related to. It's just a coupon that comes in with a check. In October, they file the actual return, where we can understand more about what the background is of that income and do more analysis with it. So we're really on a pretty big lag. Next slide, please. So I mentioned it a little bit earlier, but I want to talk a little bit about the broader economy. This is having worked in Oregon and in this region for about 20 years, this really is a unique situation that I've seen. And so I think what we're seeing here is, you can see it on the charts, the chart itself is basically 5-year growth is the dark bands, and the 1-year growth is the lighter bands. So the 1-year growth is a shorter term kind of look, and the darker bands is a longer term kind of look. The longer term kind of look, I want to note, comes off of COVID. So we're going to have some positive numbers there as a result. But what we can see here is in the non-farm employment, locally, even in Clark County, we're starting to see a little bit of weakness in our employment base. And so that's a much bigger, broader concern than we've had before. Next slide, please. This here we want to talk about how skewed these taxes are. And I know Jeff has spent some time with you talking about PFA and in your BIT, talking about how concentrated these taxes are. So 5% of taxpayers for personal income tax pay almost half of the income taxes. Just 5%, so about 5,000 out of 100,000 filers. In the business tax is even more that case. 5% pays almost 3/4. And that's only 250 companies out of about 5,000. So we have a much smaller base to bounce off of. So it's not a very broad-based income tax, and so it's not very resilient to ups and downs. It's going to feel them a lot more than your garden variety sales tax would or property taxes. Next slide, please. So this is just a quick chart that looks at what's happened basically since the taxes started. I think for purposes of analysis, and as we're talking about this, I think the bottom line, that blue line, that dark blue line, we should just ignore. That was the first year of the tax. We didn't have any withholding or estimated payments, and so you'll see all the payments came in at the end of the year. The last 4 years are more typical. You can see the top bar is actually the current year. And that current year looks fine right now. It's still very early. You can see the big bump in October that happened, that we believe is mostly one-time money. And now we're tracking pretty close to the forecast. We are expecting this forecast now to end at just above the blue line at the top at the end, about a little over $350 million. And I'll talk about that in just a second. Next slide. So here's our current forecast. This is where things sit right now. You'll notice at the bottom, I want to focus a little bit more on the bottom, the changes from the last forecast. So the changes from November 24, we do have a little bit of an uptick in the current year. Again, that's because of a one-time lump sum of money that we received. Otherwise, things are tracking relatively close to forecast. And that's the same with FY27. We didn't change that forecast very much at all. We did lower the out years of the forecast, and that reflects simply more uncertainty about the longer-term health of the local economy as well as the national economy, too. So it's a very short presentation. I wanted to cover a fair amount, but I also wanted to leave more time for questions. So I'm happy to answer any questions that people have, and we'll go from there.
Thanks, Josh. Really appreciate you being here today. We'll go to the board with questions. We'll start with Commissioner Jones-Dixon.
Yep, thank you, Chair. The only question I have can we look at, are you able to break out the numbers via districts, specifically as far as the tax and the numbers that you show? I know we're looking at Multnomah County as a whole. Is that possible?
Yes and no. So I think I can answer that question a little bit by example. So let's say you work in Multnomah County, you live in Clackamas County, you work 2 days in the office, 3 days in Clackamas County, you file from Clackamas County.
That makes sense.
How do we allocate those? And so there's also should be noted, about a quarter of the taxes come from outside of the region. So the people that earn money here and owe income taxes here, but they don't live here, or the company isn't based here.
Got it. Great. Thank you.
Thank you. Commissioner Brim-Edwards.
I don't have any questions. I've got a pre-brief, and it's pretty straightforward. Thank you for the information.
Thank you. Commissioner Singleton.
No questions. Thank you so much.
Commissioner Moyer? No. I had a couple questions. So on slide 6, when you talk about the top 5%, what is the dollar amount for the top 5% within the metro region?
Oh, you can't quote me on this, but I can get it pretty close, I think. So personal income taxes are about $200 million, and so 40-some odd % of that would be about $80 or $90 million. Is that what you're asking, or are you asking something different?
No, I think it's,
Okay.
So the top 5% refers to the top 5% in terms of numbers. What, and is, for the personal income tax, like what amount is that to make it into the top 5% of?
Oh, I'd have to check that. It's going to change every year.
Yeah.
Yeah, so I don't have that with me right now, but I can look that up for sure.
Yeah, I'd love to know just what that looks like. We have that, well, actually, I mean, even on the state level, right? Because we're such a, we do lean so heavily in income tax even at the statewide level, but just understanding kind of how much of our tax base is reliant on what salary and those kinds of things. We talk about that all the time here too. And then I'm just curious of the conversations at Metro, because again, we have this with the preschool for all tax, with the reliance on higher income earners is, the reserves that are needed, the amount, because it's such a volatile tax. How have the conversations around that at Metro evolved at all, like in terms of the reserves that are going to be needed, or what you're looking at, especially with the forecast that's trending downward?
Thank you, Chair. I'm going to answer this from the perspective that I've had in the room. Yes, I think we have. I think we've produced, if in our documents you can see, we're talking more and more about the fact that probably the last dollars in the door, per se, that go out the door and come in, need to be pretty flexible, because we're not going to know those last dollars until the very end. You saw when we actually see the money, that can fluctuate by $10 or $20 million without explanation, really. And so we need to build in some flexibility at the sort of the extremes of the forecast on the budget side, in order to realize that we're going to bounce off, and sometimes we'll have more, sometimes we'll have less, but we're going to need to scale up and down depending on what the situation is. Reserves will help, but they'll mostly help delay hard decisions more than they will fill a hole, per se, right? They'll buy you time to make better or more thoughtful decisions. I don't think we can think of reserves in this case as a plug a hole and get to the other side. I think it's more instructive to think of it as buy yourself some time to make more thoughtful decisions.
Yeah. Okay, thank you. I really appreciate you being here, Josh, and I think that as we are engaging with Metro in conversations about governance and things like key performance indicators, and how we are going to continue to work together to make sure that these dollars have the most impact. Understanding the forecast, what this means for the shorter term and the longer term, is going to be really important to that. So thank you so much for being here.
You're welcome.
Can I ask one? I'm sorry. Can I ask just one quick question? Sure. This is kind of a follow-up. That listening to the chair's question I had. This slide about the tax liability, that's slide 6, being skewed toward high income filers. Have you done any sort of analysis of whether that top 5% is changing? Like, is that a pretty steady, like the businesses that are in the top 5%, they're just consistent year over year. Same thing with the individual filers. And is it consistent, or are we seeing, because of either business relocation or a change in sort of the economic health of different businesses and high net worth individuals, are we seeing a reduction? So then you have like a new group of the top 5?
Yeah, I'm going to follow up with you with more detail on this question, but I will tell you anecdotally, about 25% of the taxpayers themselves, our whole stock of taxpayers, turns over every year. So we do have people coming in and out. Think about people that retire, sell a business, people that are been in the home for 50 years, sell their home, they got a capital gain, they owe their taxes 1 year. That'll happen. That happens every year. So we do have that. I will tell you the top personal income taxpayers are probably more volatile than the top 75% of businesses, just because they have a lot of one-time gains that pop into people's incomes at these investment levels. And so you just get 1 year somebody owes a bunch and 1 year they don't. So you'll see more volatility on the personal side than on the business side, I think. But I'll follow up with more details.
Great. And then sort of my follow-on question would be that if the top 5% is sort of changing out, are they actually having less income than the people they're, either the people or the businesses they're replacing, which is impacting the forecast? And I don't need the answer now, but I'm curious about that as well.
Yeah, Commissioner Edwards, I'd just say one thing about that. I think that you can see that even though they may be going in and out, they represent roughly the same percentage of the total, and the total's been relatively consistent. So I think there are variations within that group, but we'll get you some more details when we get back.
Thank you.
Thank you so much, Josh. Again, appreciate you being here
You're welcome.
to have this conversation today. With that, I will invite Anna Plum and her team down to give us a presentation on the financial overview of HSD for FY27. Good morning, Anna and Antoinette.
Good morning, Chair and Commissioners. For the record, my name is Anna Plum. I use she and her pronouns, and I am the Interim Director for the Homeless Services Department. Thank you for having us here today. As you said, we are here to brief the board on our projected financial overview going into fiscal year 2027. We will not be talking specifics of the 2027 budget, as we are not yet convened as the body to consider that, but we do want to, based upon the forecast and some other financial information, just make sure you all have a solid understanding of where we're headed as we look at our sort of revenue projections for our next fiscal year. Next slide, please. So we are going to spend some time talking a little bit about SHS fiscal history from a different perspective, from the Homeless Services Department perspective. We will focus on our financial outlook for 2027, and we will spend a little bit of time talking about how we as a department are thinking about our budget for next year. Next slide, please. So we've talked about this a little bit before, but I think it bears repeating to talk about how we got to where we are right now. As a reminder, the SHS fund was being implemented around the same time that our county and the country was responding to the COVID-19 pandemic in our community, which means that a small office of the chair was ramping up services across the community, ramping up themselves as a department, and responding to a global pandemic at the same time that they tried to ramp up services from this new revenue source. There were underspending in the first 3 years of SHS due to those factors and others. What that means is in those first 3 years, we had significant amounts of one-time only carryover funding that carried over into the next fiscal year. So big buckets of carryover, and I'll show you what that looked like in a few slides. On top of that, in 2024, two things happened. Because of the underspend in the initial first years, Multnomah County was under a corrective action plan with Metro that did require us to spend significant amounts of what we had in our resources. At the same time, in that same year, we received about $50 million in revenue that we had not anticipated in our budget. And we were directed to program that funding due to the crisis on our streets. So the decisions were made to program that funding despite it being one time only. At the time, we were really zeroing in on using our funding for shelter and day centers to help people be safe off of the street, but also to add housing placement to our community so that our shelters and day centers are places that link people to housing and are not just folks that places have to stay. That was a part of the community sheltering strategy and a part of the priorities of our board to make sure we were expanding those services. Next slide, please. So where are we now? What that means is a significant portion of our homeless services system is supported with one-time only funding. At the same time, around 2024 and 25, our spending ramped back up. We are now spending at the levels that we would expect and that we've agreed to with our partners. At the same time that our forecast has been reduced the last 2 years. As you heard previously, it's difficult to predict what a revenue will look like for a new tax, and there has been some volatility. In the last 2 years, there was a reduction in our forecasted revenue as our spending ramped up to what we expected and what we had budgeted. What that means is our carryover funds are almost gone going into next fiscal year, leaving we have mostly ongoing funding, and we do not have enough ongoing funding to sustain the system that we have built. Next slide. This is what this looks like graphically. You've seen versions of this before. This is just SHS funding. So this is not our full budget. This is just looking at our SHS resources over time. The dark green is what we spent. The orange is the carryover funding. The black dot is what we had forecasted. So that, as you can see, that orange bar is gone as we go into next year's budget, meaning that we need to right-size our system to what we expect to be our ongoing revenue amounts moving forward. Next slide. I do want to remind you that the short story is we're going to have a revenue gap, and we'll get into that in a minute. Antoinette will walk you through it. But I do want to remind you that this is not the first time we've had to make reductions. In fact, we've made reductions twice in recent history. I'm just going to briefly walk you through that as well. Next slide, please. As we adopted last year's budget, the budget that we're in now, when we adopted the fiscal year 2026 budget, that was also a year where we had to make reductions. Going into this fiscal year, we reduced $32 million from our budget, a 9% decrease from the previous fiscal year. That did include cutting 8 FTE. We did make some one-time only general fund investments to reduce the amount that we had to decrease our budget. We sent $10 million over to the city to support their alternative shelter sites as a one-time only investment. And there were some other programs that we had proposed to reduce as a part of a reduction that were bought back via chair and board amendments to make sure we were keeping some important services in the community. Next slide. After we adopted the fiscal year 2026 budget, we had another funding challenge, which you probably remember. Our budget per county policy is set to the governor's recommended budget when we are receiving state funding and when we're in the biennium where it has not yet been adopted. So our budget was set to the governor's recommended budget. As you know, the legislatively adopted budget was different and made significant changes in the amount of funding going towards homeless services. So we had a difference between what we had budgeted and what we received from the state of $28 million. We went through a process with you all to rebalance our budget to address that gap, and we were able to backfill $20 million to maintain some of the services that were funded. We maintained all the shelter units that were funded by the state and all of the long-term rent assistance programs. We were able to keep the amount of funding needed to sustain folks who have been placed in state-funded rapid rehousing programs, but we did have to reduce the number of new placements we were able to make with state funding due to the size of the gap. At the time, we discussed with you that we knew we were backfilling things that might be difficult to backfill moving forward. We did flag for you at the time that we expected a larger gap to happen in fiscal year 2027. And what we said then remains true today is that we were hoping to backfill things to help us have a longer on-ramp to the cuts we're going to have to make next fiscal year. And we started talking about how we might revisit our budget priorities as we look at a significant resource constraint and how we want to redesign our system to be as efficient and as effective as possible in that resource constraint. Next slide. This is just a reminder to sort of remind you of where our current budget is distributed across our divisions. This is our fiscal year 2026 revised budget after the state rebalance, and this is how our funding breaks down, total funding across all of our divisions. So 38% on safety on and off the streets, that's shelter and outreach. Housing placement and retention is essentially our short-term housing programs, rapid rehousing. Supportive housing are our long-term and permanent supportive housing programs. The other county departments, the program offers are linked at the bottom of the slide. You can't see it because of the closed captioning, but there are lists of the program offers there. Those are programs that fall under and serve the SHS local implementation plan, but live in other departments. Examples would be the Behavioral Health Resource Center, for example, is actually funded, SHS funded, but in the health department. System support, access, and coordination includes a lot of things that help the system function. A big one is our HMIS system. It also includes coordinated access, funding for things like referral processes under 211, our employment programs. So there's a lot of system supports in that particular division. So this is just to remind you of how our budget is currently distributed across our divisions. Next slide. Okay, we are going to do some 2027 finance projections, and I'm going to send it over to Antoinette to talk about those.
Good morning, Madam Chair, members of the board. For the record, my name is Antoinette Payne. My pronouns are she, her. I'm the Finance Director of the Homeless Services Department. I'm here today to walk you through our funding projections for FY26 compared to our FY26 revised budget. We are only discussing funding projections, and we cannot speak on what's in the budget at this stage in the process. If you can go to the next slide, please. For FY27, we are projecting a $87 million difference in our funding from our FY26 revised budget that occurred after the state rebalance. This projection is a 20% decrease from our current budget of $334 million. We are projecting to have $247 million of funding in FY27. Next slide, please. This slide is comparing our FY26 revised budget to our projected funding by source. This slide gives more detail on the difference we are projecting. In the FY26 revised budget, there is a significant amount of one-time only in our budget, and some of this is truly one-time only. As a result, we will not have to cut that amount because some of that is truly one-time only and never meant to be ongoing. The amount will be less than the $87 million we are projecting. The final numbers will be available when our requested budget is released Friday, February 13th. Lastly, this number could continue to change as we move through the budget process through adoption. So I'm going to discuss a few notable changes in our FY26 revised budget versus our projected FY27. So our general fund, one time only, second row, we are projecting a $19 million difference due to the fact we received one time only general fund in our adopted budget and used one time only capital to close state changes during the rebalance. Also, the state and Fed fund, row 6, there is a $11 million difference to us due to us being able to carry over about $8 million of state funding from the previous biennium, and the remaining is from us being allowed to use $3 million of year 2 funding in our state shelter allocation. This $11 million was used to rebalance our budget based on the changes we experienced in the fall. If you look at SHS, one time only, row 8, there's a $42 million difference due to us having less carryover as seen in the previous slide because we have spent down this over the years. And then I'm going to pass it back to Anna to talk about the last difference that we're projecting.
Thanks, Antoinette. So I do want to note that you can see we are anticipating not receiving the City of Portland's funding that is historically gone to us via the IGA. I want to be clear that we are in active, productive conversations with the City of Portland and are working really closely with them at a staff level to come up with some joint planning for our joint fiscal challenges in the next fiscal year. Based on those conversations, it is our understanding that the City of Portland has committed to keeping those fundings in the homelessness response system, and their plan is to use that funding to support their alternative shelter sites. Next slide. So I do want to talk a little bit about, based upon the size of that revenue gap, how we are thinking about it as a department. I want to note we've been starting to plan for this since July. We've been thinking about this for a long time and doing a lot of active work to prepare ourselves for this challenge. We developed a problem statement and a solution. The problem, as you can probably guess, is that we have a system we can no longer afford, but we need it to effectively, efficiently, and equitably lead to housing. Our solution that we propose is to redesign the system to effectively, efficiently, and equitably house as many people as possible within our significant reduction in resources. By efficiently, we mean people access housing as quickly as possible in a way that allows that housing to be effective. Effective means it is stable. Folks can stay in that housing. If it's permanent supportive housing, that subsidy is helping them stay. And if it's a shorter-term resource, they are able to keep that housing once that subsidy goes away. And by equitably, I mean we are continuing to focus on reducing disparities in who experiences homelessness, guided by our culturally specific providers' feedback and supporting their programs. Next slide. Within that problem and solution, we have 3 priorities going into the 2027 budget. These are in prioritized order. The first is to keep people housed, making sure folks we've housed previously are able to keep that housing. The second is to prioritize housing placement. We know that housing is what ends people's homelessness, and we want to protect our ability to house as many people as possible. The third is to maximize shelter effectiveness. What does it look like to have the right balance of shelter and housing? We absolutely need both, and we need our shelter to lead folks to housing, and safe and stable and lead folks to housing. So what does that look like in our budget moving forward? Throughout all of these, we are continuing our focus on serving our priority populations and making sure that our programs are designed to reduce the disparities in who experiences homelessness and who has access to our programs and who is housed and sheltered via our programs. Next slide. We clearly have a significant amount of work to do to prepare for this budget that will be public next Friday. I do want to highlight a few tools that we're using as we make these decisions, and there's 2 that are not on this slide that I do want to highlight, but I'll go through the slide first. We presented to you a few weeks ago a shelter report, which went through our 24/7 housing-focused adult shelter system specifically and gave us some really great in-depth information on how those programs were functioning in terms of their length of stay, their housing outcomes, and sort of how they were performing. I do want to note that report did not include, and one of the tools we're also looking at is what is the state of the facilities that we use for shelter. We have a lot of shelter programs across our system. We're also taking a hard look at the assets that we own or lease and how much they cost, the condition that they're in, and what it would look like to remain or not in those programs in a longer term. We're combining that with our analysis of the shelter report. We have also done program level evaluations on all of our programs. And this program level evaluations include both our outcome data, our our priorities, and our racial equity lens tools that we use across our programs. So for example, looking within a program offer that is housing, not just rapid rehousing programs, but each specific rapid rehousing program within that, we are evaluating based upon its alignment with the SHS local implementation plan, with our homelessness response action plan, with the percentage of population A people that program serves. We are looking at how they're performing on the outcomes they are contracted to perform, and we're also looking at whether the program is designed to reduce disparities for relevant priority populations and their progress so far in serving folks in those priority populations. So a very specific tool that we use to review all of our programs. On top of that, we have also developed a tool that looks at the average cost of some of our major services, shelter, housing types, et cetera, and allows us to sort of gauge up and down if we change funding for that particular service, how does that change our outcomes, so we can try to get the right balance of services and the right balance of outcomes for our community. The other tool that is not mentioned here that I do want to uplift is we have done a significant amount of provider engagement leading up to this budget. We know that our budget timelines are tight, so we tried to start early. As noted, we have been projecting that we're going to have this gap for a while. So as early as our most recent provider conference in the fall, we spent time doing a public sort of budget policy tool where we put forward some potential priorities and had the folks in the room help us rank and rate our budget priorities. We then sent out a survey to all of our providers with that same information, asking them, here's what we think we're going to be, here's our draft priorities, what would you do, what would you change? And we did change some of our priorities based upon that feedback. We have done, in partnership with the Homelessness Response System team, multiple listening sessions for providers as well, where they can come and give us their feedback on what our budget priorities should be going into a significant constraint. So that information is also really guiding the decisions that we're making, and it has somewhat changed the priorities that you saw on the previous slide based upon that feedback. We did the same engagement with our staff as well. And then as a reminder, we do have equity data built into our program level evaluations. We do use our racial equity lens tool across all of our budgeting. So we have a tool, we call it the RELT, Racial Equity Lens Tool, and we use that to evaluate our programs and our funding decisions throughout our budget process as well. Next slide. Antoinette mentioned this today. We are not talking specifics about our budget, but that will be published next Friday the 13th. That will have details of how we are hoping to address our revenue gap and present to you a balanced budget. The chair's proposed budget is released April 16th, and then we will be adopting on June 4th. I do want to note that we are in sort of a status quo with our federal COC funding due to some court rulings that went our way. The COC is starting to process renewals right now, which is great news, but we do know that change is coming, and that next summer we will have more information on a new COC application with revised priorities that will be a significant challenge going into the next budget year after that. Okay, next slide. That is the bulk of our presentation, and we're happy to take questions.
Thank you so much. Appreciate the overview of incorporating both the forecast information and some of the other factors that we're looking at for FY27. I'll just remind the board that we're not able to have specific budget conversations at this point because of Oregon budget law, but I'm sure there are questions for Anna and Antoinette on the information that was shared today. So with that, I will open it up for questions and start with Commissioner Brim-Edwards.
Appreciate the information you provided. I wanted to sort of drill down a little bit on the proposed change in strategy. So sometimes strategy has to be changed or adjusted based on budget. Or it's based on actually looking at the strategy and did it successfully achieve the goals and the results you wanted. And so on slide 14, which is the policy goals, you have 3 policy goals, and you said they were in the order of priority. And noting that the 3rd priority is maximize shelter effectiveness. If you're going to deprioritize shelter, do you expect that the number of unsheltered to increase? And wouldn't those most likely be the most likely to be most chronically homeless? And I'm sorry, this is a multi-part question, but one of the strategies that was adopted, you referenced the community sheltering strategy, even though it wasn't actually listed on the slide as sort of an anchor of the agreement between the city of Portland and the county. And that was based on a certain number of increased in shelter units and a certain amount of flow through. And while the county didn't quite get to the increase in sheltering units that it had committed to, it appeared it definitely did not meet the placement services or the placements and expected flow through, which was supposed to lead to a reduction in homelessness. So I'm curious about what is going to be different, or has the analysis been done about why the county didn't meet its placement goals? I'm concerned that maybe a shifting strategy and that we don't have the analysis. The shelter report didn't give that. Was it the wrong services provided? Was there no services? Were there ineffective services? Do we have service performance issues? But if the county is going to propose like shifting away from sheltering as a priority and prioritizing placements, what about the last placement? What do we know about the last placement strategy that did not lead to a reduction? Sorry, that was a long question, but
That's okay. What I can tell you about the last placement strategy is we were never able to fund it at the level that would have actually gotten us to that place, to the placement goals. We set ambitious placement goals in the community sheltering strategy, and we're not able to fund what would have actually resulted in that level of flow through. That's one of the reasons we're being really thoughtful about the HRAP KPIs and why we haven't set numeric goals yet, as we want to know what our funding situation is and then make sure we set goals that we can actually fund.
So when the budget is released, you're going to actually show what the new placement strategy and services are and what the specific outcomes would be and how, and to be able to compare what the county had done previously with what we're planning on doing and the expected change.
So our budget will include what we hope to accomplish in terms of people served in shelter and housing placements. I want to be really clear that it is going to be exceptionally difficult to balance all of our services across the size of the reductions that we have to take. It is not possible to do more with less. It is possible to be more efficient and effective with the resources that you have by making sure you have the right balance. And that's what we're focused on doing is, our goal would be to focus on increasing the people that we house and hoping that and having our shelter be an effective pathway there.
So this is the strategy generally could be described as less inflow.
And Anna,
I would say,
Anna, real quickly,
Okay, thanks.
I'm trying not to. I know you're doing such a good job. You're doing such a good job. So we'll wait to have discussions about the internal workings of our specific policy decisions on how we're going to make our funding decisions for next year's budget. We can talk fully and robustly about this year's budget and decisions that we have made. And so I know Anna's aware of the research and she's trying really hard. She's doing a great job.
Okay, I'm not going to ask this in the form of a question, but just a statement. I've heard that hundreds of shelter beds will be closing, and I would hope when we have the budget planning document and the policy goals that we're able to very clearly see how the investments, how it will be different, because I feel like it's just a shift in strategy without having done the analysis of just, and I don't think like just we didn't have enough funding is a thorough enough response of why didn't that work? I mean, it was a strategy that we all had, the city and the county, the city of Portland and the county had agreed upon. And if we're going to shift pretty dramatically from that, why didn't it work? And then just this is a, Jenny, you can tell me if this is not, this ventures outside of what we know, of what we can ask. So if the strategy, if the agreement with the city of Portland is that we're going to make investments and through both our joint budget processes, and then after that we're going to set what the goals are versus here's what our goals are. Are we going to know what those goals are when you actually propose the budget?
Sorry?
It's just a question. It's more of just like a structural question. Like we were asked to approve KPIs that just had blanks in it, and with the promise like once we know what the budget is, we'll be able to like fill in like what we actually expect to produce. So I'm just wanting to ensure that that's going to happen at the same time, not a trailing, like this is what we got and now that's what we're going to set. that is the goal.
Well, so thank you. So Jillian, thank you for coming down. I think that question is really about the homeless response system as a whole and the updated plan, as well as the goals that were passed by both this board and the council. So Jillian, do you want to remind folks about how the goals and the KPIs are going to work towards how they interact with the budget process, and then what the next step would be after that?
So just to clarify, because the commission was asked to approve KPIs without the specific goals, it was like, when we have what the budget is, then we can say what it is. And I'm just wanting to make sure that they're actually going to be jointly presented. So if it's like, if this budget investment is made, here's the goal of the target that we're trying to hit.
So let me back up for a second. The current set of KPIs expired at the end of the December. One of the challenges with those KPIs is they were not connected to the budget process. With our transition timeline to the new KPIs, they now will be. And the KPIs are the investment strategy of this body of the city of Portland, right? The plan is the policy and program. The KPIs inform the investment strategy, but are really, they'll make or break by the budget decisions you make. So the budget decisions that you make for fiscal year 27 should be that they'll create the baseline, our starting point of where we are at. And either we will then be able to show the projection within the context of the KPIs. Did your budget decisions project us going this way or that way? And that is the power of your budget decisions and how they should be directly informed and tied to key performance indicators. Only 5 of the 12 have specific goals. So as we go through our budget process, we will be able to tell you if you fund housing placements, for example, at this level, this is how many placements we'll get at the end of the year. This is how they will influence all of the key performance indicators that relate to outflow.
So I think your answer is yes to my question.
Yes. Yeah, but it is a little bit, Commissioner, of a chicken and an egg thing, right? They are tied together.
Yeah, and I think, Commissioner, what I'm hearing from you is that as we have decisions before us, to understand how like a certain decision will impact the goal, the degree of which we can reach a goal. Yeah.
We had before us a set of goals in a number of different issue areas, reducing net homelessness, more housing placements.
Yeah.
But there was blanks in the place of like what our goal actually was, and I'm just wanting to make sure that like if we do X, that there'll be a strategy that will deliver a specific goal that will be named, not we'll implement it and then say that was the goal with whatever the outcome is.
Correct. So I just use an extreme example. If you only fund 5 new housing placements when we look at inflow compared to outflow, we're going to come back and tell you, oh, it's going to take 50 plus years to reduce overall homelessness by 20%, right? So we will have that dynamic dialogue throughout the budget process.
I don't have any more questions. I do want to see the analysis of what happened to the community sheltering strategy that had been approved and why we didn't get the outcomes we wanted.
Right. Thank you so much. Commissioner Singleton.
Thank you, Chair. Thank you all. I don't have questions for you, Jillian. I just want to appreciate a couple of things I heard in the presentation, just the work that you all are doing, the engagement with providers, and that their feedback's going to be reflected in what we see, as well as a bit of the overview of how you're approaching the budget this year. So thank you for being thoughtful and intentional about that. I don't know if I'm going to have many questions. I have a bit of a soliloquy, I think, that will end up happening here. The challenges with this homeless services budget are compounded by the fact that in spending down one-time only SHS dollars, the way that the county did, as shown on slide 3, where we overinvested in solutions like shelter and day centers that require ongoing funding. This left the rest of the system subject to drastic cuts that we had to make last year, again this year with state reductions on those same activities like housing placement and eviction prevention, as well as further reductions that we see coming this year. I think you all know that I don't think we have a system yet. We still have a patchwork of programs that have been funded based on political whims. And it is part of why I will continue to advocate for us changing the dynamic of the relationship with the city of Portland, trading money back and forth, having the conversation just about shelter. We're never talking about the full system when we have conversations with our colleagues at the city. I think they have a different role that is about public space management, and they may want to do one-time only shelters. They may want to do day centers. There's a lot of things they can talk about doing, but our focus should be how do we get folks out of public space management activities and into services. And I will say it's not all homeless services, right? It's county services with a broader perspective, which is why we have the homeless response system and the action plan. This is something I've been speaking to since I got here a year ago, and I think that in addition to the multiple work sessions on outreach and shelter that I've held, the roundtable on eviction prevention that we're discussing and learning all sorts of things about the difference in how people think about and define eviction prevention work, even just in one meeting. There is the way that some of our departments at the county define housing is completely different than how housing is defined in housing services. That is a huge part of why we've had such a disconnect on being able to evaluate outcomes across like programs, because the programs are not actually alike. This requires just a lot of revamp that I think we started to get at with not only the budget last year, but also the budget note about consistency of data in homeless services. There's more work for us to do there, and I think that that's a report the board is still waiting on, so I think that will be really helpful to help frame this larger conversation we're having about county departments. And I just want to say part of the intention of my work over this year has been to get us in a space to have a hard conversation, but to actually act. We know that the corrective action plan, coupled with the relationship and the focus with the city of Portland on sheltering only, has left us in the role that we're in now. And I don't say this to disparage my colleagues at the city. I think we have set this up in the wrong way, where everybody thinks they're the decider about shelter programs, but the county is the decider about shelter budget, not the city. They get to decide about their budget. And we've been stuck, frankly, since I got here in 2007 in this same conversation about shelter. It has just changed from being a city of Portland responsibility to a county responsibility. And I just think we have to get out of this stuckness that we've been in and move into a different space on this. So I'll stop there because I'm preaching at two people who have nothing to do with that part of the work. So thank you.
Thank you, Commissioner Moore.
Yeah, thank you. I am less knowledgeable than Commissioner Singleton on the history and back and forth, but I do want to kind of jump on the portion of history I have been here for, which is that the city had been paying us to have a more robust shelter system, and we built that out accordingly in shared priorities. Now, if I'm understanding it correct, and I know there was some weird back and forth last year, and I have feelings about that as well, but that is what it is. Now the city is not going to financially support our shelter work as of right now. We are currently, if I'm understanding what you're saying, we are not counting on $25 million from the city of Portland to run shelters.
So the city of Portland, It is correct. The city of Portland is planning on using that funding to support their own programs. What it funded in our budget was a significant number of shelter units, but also some other programs.
Okay.
Correct.
Sorry, and I just want to make clear, because I think you were getting at this, that the reason that the city was providing dollars is because prior to the joint office being created, they had been funding a shelter system with their own city dollars. So I just want to make sure that that's part of the history too.
And, you know, and I have had conversations with the city and the mayor, and I have a hard time, and this is, you know, grappling policy-wise, with this expectation or desire for Multnomah County to not make reductions in shelter when we're losing $25 million that was specifically to support that work. And I have heartburn over that because I have feelings about overnight-only shelters. Again, if it is a public space management approach, then I think that that is a strategic approach. If it is an approach aimed at ending somebody's homelessness, I would strongly argue it lacks the level of depth and support necessary to really help somebody through what may be for them really complicated barriers to housing that you know, we've been able through our partners to help people get through. So, you know, I have concern about that. I have concern that we're going to keep, it's not us, that shelters that I think are below the standard I would want for human habitation, I'm just going to be honest, will stay open, and shelters that really invest in the dignity of people, no matter where they're at, are going to have to close. And you know, it's too bad that we don't have the ability yet to compare overnight-only shelters with the performance of the shelters we did have the ability to look into, because although there are differences based on type of shelter that we're funding, I would be very shocked if they were not all leaps and bounds better at moving people out of homelessness than the overnight only. So this is a really hard situation because I fundamentally think our shelters do a better job. And I hate that the loss of $25 million puts us in a position where we either reduce what I think is more effective than the overnight only strategy, or we have to cut the pathway out of homelessness. And so I think probably I'm, again, like Commissioner Singleton preaching to the choir, but I have heartburn over that. I don't think that approach is collaborative. And then I really don't like insinuations that if we make the cuts that are necessitated by our budget, we are somehow undermining the city. That is, to me, incredibly unfair, and really not looking at the choices they have made and what we're getting for it. I do have a question, and I don't know if this is Antoinette or maybe a little bit Eric, who just left. As we move forward and we don't have reserves or one-time only carryover, due to the potential volatility of this funding stream, what would be the financial best practice of building a reserve or building some mechanism in which we are, and I don't think it's today, obviously, because of where we're at, but I think about this is, how do we make sure that the next recession or dip we have some stability fund that we maybe could create in a better time, assuming this gets reauthorized. I'm really curious about what that would be. Is it 3 months? I know that's kind of generally county policy, but we have a pretty stable, comparatively, stable property tax. I don't know what the right length of a reserve is for this volatile of income or revenue source.
So our current policy is 10%, but Metro recommends us to have 15% of the forecast in reserves. And I think last year, we tapped in all of our reserves, and we committed to rebuilding that in 3 years. And so we're on year 2. So hopefully by next year, we can begin to build that up.
Those are my questions. Thank you.
Thank you, Commissioner. Commissioner Jones-Dixon.
Yeah, great. Thank you. Thank you, Chair. Per usual, thank you for just the update and just your ability to distill, the last 5 years worth of work, and especially the last year is amazing. It's a true gift. So thank you, Director Plum and Antoinette, for being here this morning. I appreciate it looking or hearing just the process. Ditto to everything that my colleagues have said as far as the process that you've gone through as far as engaging with the City of Portland, the level of engagement with the 3 cities or 4 cities out in East Multnomah County. The only question I have is just around just the connection to our Spark initiative and how we're leveraging, how are we ensuring that we're using that plan, as far as connecting to all the rest of the work through that we're, all the rest of the departments, and just opportunities to fill those gaps.
Shameless plug, we're going to give this presentation to the East County leaders next week, so they will have all the information. I'm excited to do that. We are working closely with the Spark Initiative in the KPIs that we are designing for the Homelessness Response Action Plan are the bulk of the KPIs that we have in the Multnomah County Strategic Plan, so that our county strategic plan aligns with our regional plans. So we have a really close relationship there to make sure that what we're measuring as a region, we're also incorporating into our county strategic plan.
Okay, great. Perfect. Thank you. I look forward to engaging in the conversation moving forward as it pertains to the budget.
Yeah, thank you. I really have appreciated all the questions and comments today from the board on this. I mean, this is such an important topic, and I think a lot of the points that have been raised are incredibly important, especially regarding our partnership with the city and how we're both responsible for different focus areas in the system. We all are responsible overall for the continuum and how we impact what's actually happening on our street, and especially for those people who are experiencing homelessness. I will say that I'm already in conversations with President Dumphy about scheduling out our joint sessions, and the first one we want to have is really about roles and responsibilities throughout the continuum. So we're going to be aiming to get that scheduled next month. So I will look forward to that conversation. Thank you, Antoinette and Anna, for the presentation. I appreciate your transparency in sharing the approach that HSD is taking to prioritize investments based on the solid policy as well as the experience we've gained over the last several years as we continue to respond to the crisis of homelessness in our community. And I do appreciate the history that you added in there, because I do think the focus and what was asked of the county have really shifted. And for me, the priority is we are now in this new normal where we do not have carryover funds to rely on. We really have to look at what is the year in, year out, ongoing system need to be set up for success in reaching our goals, and that is, I know that, in the conversations we're having and the work that we're doing, that's really the focus here, and it's going to lead to really hard decisions that this board is going to have to make, understanding that we're in a different financial situation. It really is a sobering forecast. We had to make those substantial cuts last year. We had to make them mid-year this year. We know more cuts are going to be required in this year's process. And at the same time, we are still going to be providing far more services to address homelessness than we had just a few years ago. So I do want to keep that in mind, that the resources we have, and especially with what's happening at the federal level and other parts of the country, we are truly lucky to have the SHS measure as a resource here locally. But we have to continue to apply the lessons that we've learned and really make these adaptations, really be able to strengthen our response in the changing circumstances. I will say that, spending those SHS resources effectively is something that I know is a focus for all of us. I will say we have a track record of doing that. It's something even our critics have noted. The Willamette Week recently had an article that had an analysis that we are getting more bang for our buck for those SHS dollars than the other two counties, and I think that's something that we should be proud of. And we know that's despite not having a proportional amount of SHS funding equal to the regional need. And so I really believe we have to continue that conversation about the best allocation of the resources. That is something that I plan to do. And I think that's something that every jurisdiction within Multnomah County needs to be a part of. We have an outsized impact on the Tri-County region as well as the whole state in terms of our ability to respond to our homelessness crisis. So when we succeed at this, everyone does. And I think that's an important thing that we all have to keep in mind. You know, just as we have had to rapidly grow our services, unfortunately, the federal administration is making drastic policy changes, and I know you alluded to those earlier. That's going to cause more hardship and suffering on our streets, further complicating our process. This isn't, you know, we're experiencing this across departments and areas of service, not just homelessness and housing funding. But as this administration continues to erode our safety net, we have to step up our jurisdictional partnerships to serve and protect as many of our community members as we can. And that's ongoing work that I think we're all committed to. So I think that having the homeless response system, close coordination with the city, all of that is really about our joint system, how we not duplicate services, but how we continue to work together to make sure the system as a whole is as strong as possible. So we have a lot to balance. We have a lot to consider as we're thinking about the different areas of this continuum, but I'm determined to be creative, utilize the expertise of you all, our departments across the county, and work closely with all our partners and the colleagues on this board who have very difficult decisions to make to improve the response and make sure we're able to continue to, you know, move forward on our crisis. So thank you so much. I really appreciate all of this conversation today, and we will continue on as we progress through the FY27 budget process. So thank you both very much, and appreciate all the work you're going to be doing and sharing this information with partners. So thank you. All right. For our next briefing today, we have an informational board briefing on the Library Capital Bond Program, and we have Katie Odell and other members of our Library Capital team here to talk about that. So I want to invite Katie, Kate, Maggie, I think, are all here to talk about this.
Katie's on vacation this week, so we've asked Mike Day to join us.
It's always a pleasure to have Mike here. Good morning, everyone. Thank you so much.
Well, we'll just jump right in. Good morning, Madam Chair and Commissioners. My name is Mike Day, for the record. I'm the Bond PMO Director. Today, we will be providing you with our quarterly update on the library program. I'm accompanied by Kate Vance and Maggie Chavez, who will also be presenting alongside me. Next slide, please. Just introducing and providing you with an overall update today. We will include an overview of the bond program status along with a spotlight featuring our recent opening of Northwest Library and the amazing art collection across the bond portfolio. Now, next slide, please. I will read the land acknowledgement. We honor the indigenous people whose traditional and ancestral homelands are now called Multnomah County. The Portland area rests on traditional village sites of Multnomah, Wasco, Cowlitz, Cathlamet, Clackamas, bands of Chinook, Tualatin, Kalapuya, Molalla, and many other tribes who made their homes along the Columbia River, creating communities and summer encampments to harvest and use the plentiful natural resources of the area. We acknowledge the ancestors of this place and recognize that we are here because of the sacrifices forced upon them. In remembering these communities, we honor their legacy, their lives, and their descendants. Now I'll turn it over to Kate.
Next slide, please.
Good morning.
Good morning, Chair, Commissioners. This graphic should look familiar to you. There's been no major updates other than indicating where we're at today by the top red bar. Next slide, please. Since our last presentation in November, we've added about $469,000 in interest income earnings, and about $7,000 in Energy Trust of Oregon incentives for Albina Library and Northwest Library. The incentives for Northwest were above our projections, so we've increased the project budget to reflect the increased revenue. Our portfolio level contingency remains very healthy. As a reminder, these funds are restricted to library bond work. We continue to work with library leadership and our executive sponsors to maximize the value of each dollar. This means that we are strategically considering how to move funds around within the program and when to increase a project's budget responsibly to do the most good for a long-term investment. Next slide, please. We had a number of changes over the last quarter. Midland Library and Holgate Library transferred funds to contingency savings projects. St. John's added funds for enhanced roofing upgrades, including fall protection, as well as jurisdictional delays and owner-requested changes. We created the Comprise IT project, which is a hardware-software solution to better manage library patron printing services and public access computer scheduling. This was funded through the broadband savings. We also moved $80,000 in collection savings from Belmont and St. John's, or to Belmont and St. John's from the Albina Library. We added about $300,000 from interest income to St. John's for those enhanced roofing upgrades, including the fall protection and jurisdictional delays. And we've released a fourth wave of contingency items valued at approximately $50,000 that focused on technology betterments. Next slide, please. And this graphic has been updated to show the changes that we just discussed. And you can see that we have a new line that for the creation of the Comprise IT project. Next slide, please. The Auditor's Office issued a report in late October presenting findings related to construction waste recycling on 4 bond projects. This represents an industry-wide challenge, as evidenced by audits conducted at other agencies and evolving language within LEED standards and the City of Portland Code. The County Fact 9 policy is grounded in language established by those governing authorities, and any proposed policy revisions will adhere to those guidance provided by LEED, DEQ, and Metro. During our last board briefing, which was right after the audit findings came out, which we acknowledged during that meeting, but we committed to providing an update at our subsequent briefing today. We take this issue very seriously and have initiated corrective actions within our areas of responsibility. We have confirmed the waste management plans for East County Library, St. John's, and Belmont, our projects which are currently in construction, and implemented course corrections where feasible. A brainstorming session with general contractors and sustainability consultants was held in early December of 2025, and an action plan has been developed. We will be evaluating best practices and language from LEED and the Recycling Certification Institute, RCI, for updating county processes, procedures, specifications, procurement documents, like requests for proposals, and policies. We'll be looking at our internal county resources for future projects and determining how to strengthen our waste management plans, construction waste management plans, through enhanced transparency and accountability. And we've engaged with sustainability consultants to liaise with single source material recyclers to ascertain their capabilities, recommend standards and requirements for third-party verification processes, recommend a baseline requirements for tracking and monitoring software, and evaluate constraints and challenges experienced by waste haulers. At this point, we do not anticipate a need for additional board engagement and will proceed with that established plan on behalf of the bond program and DCA. Next slide, please. As we've noted before, we are essentially celebrating the openings from here on out. This includes the Northwest Library, which opened its doors to a new location on January 10th, to great excitement from the community and the media. Refresh projects were also busy, with Rockwood opening in October, Selwood saw buybacks, which included new lighting and an updated entryway. And Selwood closed for a week in early January rather than 6 weeks that it would have taken to complete that construction if we had just waited to tack it on at the end of the project. We've also announced the reopening of Hollywood Library, complete with a brand-new vinyl mural on the glass of the entry vestibule, thanks to the Portland Street Art Alliance artist Kyler Martz. This mural is an homage to Beverly Cleary and the library's place in her books. Next slide, please. Regarding our community engagement, we've held a number of construction tours at our East County Library. We've reached out and toured our community library champions from El Programa Hispano and the Black Economic Collective, and a number of youth have come through. At St. John's, we've had our community design advocates and library staff come through. Plus, a Portland Street Art Alliance teen art workshop was held with students at Gresham High School with artist Zavi to inform a mural piece that will go in the teen collection area over at ECL. And with that, I will turn it over to Maggie Chavez. And next slide, please.
Thank you, Kate. Hello, Commissioner, Chair. I'm Maggie Chavez. I'm the Supplier Diversity Officer for the county, and I will talk to us about the Regional Workforce Equity Agreement. The Multnomah County Library is the first major projects to implement the Regional Workforce Equity Agreement, which set program standards for consistent workforce goals and was designed to increase recruitment and retention of diverse workers. This is part of a regional collaboration with Metro, the City of Portland, and Portland Community College. Next slide, please. Through the feedback that we have received from our community partners like PBDG and NAMAC, unions, pre-apprenticeship programs, and prime contractors, we're implementing new streamlined processes. Our last in-person labor management community oversight committee meeting was held in person with our partners at NAMAC, the National Association for Minority Contractors. And I am most excited for our final feedback sessions, which are scheduled for next week. We are targeting 4 distinct groups: our CMGC, our construction manager and general contractor and owners representative groups, our community partners, our trade partners, and our subcontractors. And we're going to be following up with a feedback survey after all of those sessions to also collect anonymous feedback. And we are going to be taking that information from these sessions into the negotiations of the RWIA 2.0, which is set because the current RWIA is set to expire in March of 2027. And I am working diligently with the folks in the Commissioner's offices and the Chair's office to make sure that the feedback from our community is implemented in the next version of the Regional Workforce Equity Agreement. Next slide, please. As we start to wind down the construction on the library bond, I wanted to take a moment for appreciation and gratitude. So the slide that we're looking at here has 6 companies that represent the highest utilization rates for our goals out of the 300 plus contractors that are doing work on our library bond projects so far. When we see these logos out in our community, I want our folks, everyone to be able to recognize them for their contributions to our beautiful new libraries. And this is not an endorsement, but rather an acknowledgement and celebration of the hard work and dedication that these companies committed to our projects. So the top performers from your top left to bottom right are Just Right Heating and Cooling, a minority-owned business with 45% apprentices. Berrien Concrete, a minority-owned business and emerging small business with 100% minority apprentices. Southland Industries with 82% of their apprentices being women. Boyder Brothers, a minority-owned business with 71% women at the journey level. Coria Landscape with 100% minority workers, and Native Works, a women-owned business, is exceeding every goal and then some established by the RWIA. And it was very difficult to create this slide and not include every single contractor that we work with because they are wonderful, but I did want to mention a couple of other honorable mentions, if you will. Interior exterior specialists, Card Construction, McDonald Excavating, Mill Plain Electric, Hughes Electric Contractors, and Western Partitions. We thank you for upholding the county values on our projects. Next slide, please. Because of the hard work of our contractors, like the ones we just highlighted, we are proud to share that the library bond on the whole is meeting the median RWIA goals with about 800,000 hours of labor performed so far. We use median here because the goals are incrementally, are increased incrementally each year. And I will note that 8.5 down does round up to 9%. Next slide, please. Here, just in the interest of transparency, we're looking at our smaller refresh projects. They are not subject to the Regional Workforce Equity Agreement, but they are performing well and nearly meeting all goals. At the bottom of the table, you'll see the cumulative workforce utilization totals for the entire library bond portfolio, combining both major projects and refresh projects. Next slide, please. Here we are looking at our COVID forecasted numbers for the library bond as a whole. This slide includes all projects except the few remaining refresh projects. Not too much change here, as it's just our refresh projects being added, and our forecast has been performing well for paid to date. And I will turn this back over to Mike Day.
Thank you, Maggie. That's very impressive. And, you know, it's interesting when you think about the hours, the cumulative hours, and you add to those hours that are tracked through certified payroll, all of the indirect labor, the management, the supervision, and the oversight, those hours, you can probably add another 400,000 hours when you think about all of the other members, PMO, subcontractors, architects, engineers, et cetera. It's an incredible effort to pull this off successfully. So with that, I'm going to shift gears to our two spotlights for today. And thank you, Maggie, for all your hard work and the supplier diversity team to highlight Northwest Library in the opening, which we are so excited to celebrate with our community.
Next slide,
Next
please.
slide, thank you. Forgot about that. Go ahead and move on to the next slide. On January 6th, we were excited to host our Friends and Family Evening for library staff, project team members, and others who directly worked on the project. Next slide. On the 10th of January, we held our official ribbon cutting ceremony to welcome patrons into the new Northwest Library. We were pleased to be joined by Chair Vega Peterson, as well as Commissioner Moyer, who both spoke at the event, and Commissioner Brim Edwards, who was in attendance. Through the opening weekend, Northwest welcomed over 3,000 patrons through the doors. That's amazing. Next slide. Thanks again to everyone who came out for the ribbon cutting ceremony, and here are some of the photos of our great speakers, which also include local author and historian Michael Taylor, as well as Director of Libraries Annie Lewis, and Kirby McCurtis, Director of Location Services for the library. Next slide. Of course, the drum roll. Attendees enjoyed a performance by the Last Regiment of Syncopated Drummers. And yes, there were earplugs for attendees, and those did come in handy. A lot of good noise. Well, let's move now to the next slide as we dive into our specific projects. And we're now going to just spotlight the impressive art across the portfolio of our bond projects. We truly can't capture the essence with these pictures of how wonderful this art is. So definitely want to encourage everyone to go out to our libraries to see these installations and to really experience it firsthand. Next slide, please. We kicked off the art program with our first major project, the Operations Center. This space contains a number of artists from the Portland Street Art Alliance and significant commissioned art pieces managed by RAC. From the upper left to right, Between the Pages and Petals by Kyler Martz, Through the Bubble by Tenya Rodriguez, a beautiful mural by Blaine Fontana, Woodland Passages by Nikki Criara, and on the lower left to right, Elk and Sturgeon by Tom Villa, Makers Mark 1 and 2 by David Rice, Cherish and Protect by Jesselyn Brinkerhoff, Photo and Thesis by Christian Tellez. Amazing pieces. Moving on to the next slide now. Our first major library to open, Holgate, incorporated art both on the inside and the outside. And from left to right, Holding Brokenness Together by Crystal Meneses is the community mural created by dozens of community art workshops. The motif des papillons by Salomé Soag wraps the book locker on the exterior. Also, the elevators and foyer area are featured with the motif des papillons by Salomé. And the teen space features a piece called Secret Garden by Jacques Coe. Next slide, please. Now for Midland. Midland Library features a glow that comes from both the lighted canopy as you enter the building, as well as very playful sculptures. The canopy, named I Am a Future Ancestor by Lillian Pham and Paola de la Cruz, is a welcoming protection canopy that celebrates color and nature. Exterior etchings defines parts of the exterior. These were created from a community workshop with Colocate Design. And these gorgeous in the center, illuminated sculptures are called Sunstone, created by design team Hibikozo. And the lower left to right paper cuttings hang in the teen room by Nia Musiba, and the most popular spot in Midland, the gathering circle on the right by Kanani Miyamoto. Moving on to the next slide with Albina. Albina brings a whole new flavor of art, brightening up each and every area of the building. Again, from left to right. Spectral Lines by Amira Chapman hangs in the main community room. Suspended artwork by Carly Fedderson and Joe Fedderson hang in the two-story foyer, and shaped by Julia Alexis Huntler anchors the west side of the children's room. The lower left to right, the teen area is flooded with color by Our Roots and Dreams by Nikki Criara. The outdoor courtyard features a wall mural, Patterns of Memory and Growth by Darren Todd. And the Albina Blooms by Jesselyn Brinkerhoff connects the children's room in the original Carnegie building to the new space. Next slide. As we move to North Portland, we get a closer glimpse into the integration of art features into the building with the breathtaking window piece in the Black Cultural Center is Amidst the Stars by Sade Dubois. A carved window frame features Afrofuturism artists embedded right in the casing is called Footnotes from the Future by Melanie Stevens. An exuberant mural of past, present, and future welcomes folks to the Black Cultural Center. The piece is called There's Joy by Kayan Talton Davis. The Black Cultural Center also features two chairs and a table by Black furniture designer Matt Collins. Next slide. Yes, East County Library is now installing art, and we have several pieces that are being installed and are installed. And from left to right, we have the examples of our rooftop sculptures created by Crystal Schenk and Shelby Davis. And along the Eastman Parkway, we now are featuring two sculptures by Mike Suri and Teresa White. At the top, you can kind of get a glimpse of that, but it doesn't really give you the right proportions, so I definitely want you to get out there to see it. The outdoor kids play area features artwork by Michaela Goad from her book Berry Song. Art from that book also inspires the indoor space as well. So more to come on East County. Next slide. And lastly, for East County, Paula Champagne features her art in the elevator lobby bay areas. Now moving on to our Chapter 3, next slide. We have Northwest that has just opened and celebrates the Slab Town and Swifts inspired by the rich history in this neighborhood. And again, from left to right, Bound for Slab Town is one of the 3 pieces in a series by Kyler Martz. The space also features suspended artwork by Christine Clark, and the seating area with reclaimed wood from the former Safeway, which is now the Operations Center, features a mural by Nia Musiba. Next slide. St. John's, again, we have a coming treat with St. John's, a very special one. Carson Ellis, a well-known artist and Caldecott Honor winner in the Portland area, will be creating an original mural that wraps the entire kids area at St. John's. Please note, this is an image of the incredibly popular novel Wildwood, which Carson illustrated and was written by her partner Colin Malloy. The movie version is being released by a local studio later this year. We're very excited for the community to step into Carson's world when they visit St. John's later this summer when St. John's opens. And now, lastly, with Belmont, next slide. Coming soon with Belmont, Britt Howard from the Portland Garment Factory is creating an original suspended art piece for the teen area. Emily Counts will create a wall-mounted artwork for the collections area. Please note these again are artwork examples of previous works from these artists. Well, that kind of wraps up our art. I think we could share a lot more today, but these are just great examples, and we don't have time to feature all of the art pieces, but we certainly welcome and encourage folks from our community to now see the art, experience it as part of the overall library experience. With that, I will turn it over to Kate and to the commissioners and chairs for any questions.
Thank you so much, Mike. Thank you, Maggie. Thank you, Katie. I really appreciate the overview. It was especially, it was a special treat to see all of the art. I think that when you go in, you can't help but be struck by the amazing art, but to see them all together is really impressive. I'll open it up to the board for any questions or comments, and we'll start with Commissioner Singleton? We started with you last time. Okay, yeah. It's like, where are we?
It's been a while. Thank you, Chair. Thank you all for, again, this really helpful update and the presentations. I agree, the art is just so cool. I kept kind of whispering to Commissioner Moyer, like, oh, that's cool. I also just want to name, I'm happy to see the quick response around to the auditor around the hotline complaint. I know you mentioned that there's some next steps being taken. Has the auditor been read into that, and is she on board with these are kind of the appropriate ways to move forward based on the hotline complaint?
That's a great question. I don't think that we've provided a formal update to her.
Okay.
At this time.
Thank you. I would just ask that you do, since it started there, let's close that loop. I would appreciate that. I'm also excited about the Hollywood Library opening. I hear from lots of constituents about how excited they are to get in there. In fact, my chief of staff's mother was a librarian and she is using this as the excuse of the artwork to come visit, as opposed to planning a visit to come see her son. So you're drawing people in from across the country on this one. And then I just want to acknowledge the work, Maggie, that you have been doing, the work around particularly respectful workplace programs in our construction contracts, and psychological safety, I think, was the top theme of our workforce table, that people really want to see more investment there, and that there's some really good programs to draw on, so we're not reinventing the wheel, we're just figuring out how to appropriately implement some content that's already out there to really strengthen psychological safety and respectful workplace. So I'll look forward to working with you during the budget process as we think about opportunities for the county to invest in those recommendations that we heard that really line up with the next steps of the RWIA.
Certainly. Thank you, Commissioner. I'm looking forward to it. I've gone out and done a couple of site visits for Respectful Workplace in the field in construction sites, and they are really wonderful. So I have a lot of information to share.
Awesome. I also just want to appreciate the shout out, right? It shouldn't be that folks are just hearing from us when there's a problem, but that we're shouting out the good work. And I think looking at opportunities for how they're doing it is clearly working. So what can we learn and what can other contractors learn to increase their rates as well? I'm not saying everybody fell short, but when we aggregate, we can clearly see that some people who are hitting 100% on something means there's other folks who are not quite there. And so taking those lessons learned into our other construction partners. And then lastly, I will just say that St. John's just still continues to appreciate the temporary space. I'm super, super excited for the reopening of the St. John's Library, but just want to acknowledge that I know it's been a lot of work to have that temporary space, and again, want to appreciate the library staff for making sure that that happened. It's just something that I think in my first, it was actually before I even started, that I started to hear about people's concerns of not having any access, and with the other libraries in North and Northeast having some potential closures at the same time. Really appreciate the work to figure this out for the neighborhood. So thank you so much.
Thank you. Commissioner Moyer.
The artwork is beautiful. It's exciting, I think. Every time we open or reopen a library, it is a wonderful community event, and they've turned out great. I did have questions to follow up on what Commissioner Singleton spoke about related to the auditor's office. To what degree have we sought to be made whole by our general contractors who did not fulfill their contractual obligation related to recycling?
That's a fair question, and from a punitive standpoint, there has not been any action taken at this time in terms of liquidated damages or...
Yeah, I mean...
Yeah.
There aren't really monetary losses that we saw. So, and knowing that this is an industry-wide challenge and problem, how we've employed and engaged with them is how do we make the process better? And that has been our approach.
And I would say we have been damaged. We didn't lose, thank goodness, any tax credits on lead certification, but we paid for something. A contractor bid, I assume on, as they do, get quotes from subs and make whatever bid they made to provide a level of service. It is cheaper to not attempt to recycle former building material than it is to. It's labor intensive. There is a premium that is paid to do that. It's in line with county values, but I am concerned when I have been a general contractor. It is very clear in a contract, and I would assume, I do not question that it is clear in our contracts, you are fully responsible for your subcontractors. We don't choose subcontractors. Don't want to get into that business. It's not our job to tell our general contractors who they need to work with. But it is their responsibility to take ownership when their sub does not perform. I do think it's an industry-wide problem, but I also think by not holding general contractors accountable, we're perpetuating an industry problem. If I were having an apartment built and general contractors, framer, didn't follow the plans right, and it's now structurally not sound, we would not accept a general contractor saying, "Ah, the framers screwed up. I don't know, I trusted them." All framers screw up. That's not relevant to us. That's their problem. That's not an us problem. So I know that this is a discrete issue. I do feel like as a whole, as a county, I think we need to demand a little bit more from our general contractors, and we should recoup damages. If we are not given what we paid for, then that needs to be adjusted in how we were billed. That's a go forward. I think I'll want to return to that topic at another time. That being said, I'm very aware that frankly, this has been one of the best managed bond programs. We've delivered, within budget, really good on timelines, I'm critical because I have some criticism of general contractors and how they treat the public sector, and how we engage with general contractors. But I would say, this is a great example of public works and how, we've chosen to prioritize community benefit in that process. I still want us to get to that journey level. Women's, we'll get there. We're so close. I'd love to figure out how we have some expectations related to management and creating opportunities for women and minorities in management, because I think that that's still a pretty significant glass ceiling that I'd love to see looked at. But I appreciate these updates. I feel like we're doing a great job on the library bond, and the final products are a real value to our community. So thank you for that work.
Thank you, Commissioner Moyer. Commissioner Jones-Sixon.
Yeah, great. Thank you, Chair. Thank you, Maggie, Mike, and Kate for the presentation, per usual. The running theme for me is just how are we using Spark, or the continuous improvement, to improve the outcomes. So maybe that's something that we could look at. The point that you made of Commissioner Moyer as far as contracting and what have you, maybe that's another thing that we can add to the list potentially, Mr. Neal. I don't have any questions. I'm just excited. I loved how you ended the presentation as far as the art. It was like cathartic. What's that?
Poor Chris is always like in the back.
Yeah. Oh, thumbs up from Mr. Neal. Yeah. It was just encouraging, cathartic as far as seeing the art and how it's represented throughout the county. We talk a lot about the challenges and not enough about the assets that we have here, one being the library and even how the project's being managed in general. So just thank you. Hats off to you, or to the county, or the team. I think it would be, as far as the ARIA process, it'd be interesting to see how we could apply that to our internal, just the work that we do around just mental health and the other departments as well. So I'd like to engage with you, Maggie, as far as learning more about just the practices and how just the success in general. So thank you. Thank you again.
Thank you.
Yeah, just all encouragement.
Thank you. Commissioner Bram Edwards.
Okay, I love this recap presentation, and just revisiting all the art. I've loved going to the library openings and seeing how the art in each of the libraries really reflect the surrounding communities, and it's all customized and just, I think, really anchors it in community. So thanks for giving the recap. It was fun going back through it. And I just am so appreciative of the trades, the artists, the library staff who've made all these projects come to life. It was great being at the Northwest Library opening, and literally within an hour of the door closing, the whole library was just completely packed. It was fun seeing the community back, and just as they were with Midland and Holgate in my district. So it was fun to see people just so excited about county service and the thing that they love and cherish. Just a couple things. On slide 13, I really appreciate the call out for the the workforce highlights of our partners who really crushed it in some cases. I'm wondering if it's possible to get, just so I have a sense of what the percentage means. Is it possible, not today, but to get the just follow up to what does 45% mean of apprentice utilization in terms of just numbers? Just be curious about that. Really appreciate that. The other portion of the presentation I wanted to just call out is that I appreciate the sort of feedback sessions where you're looking at what the lessons learned are from the library program. I think it's super important. Sometimes we're so happy to celebrate the work that we don't go back and what could have we done different or better that to inform future work. So I appreciate that's happening. I would, if they're in a format that could be shared with the commission, that'd be great, just at like a high level, what people thought went well, what could be done differently. That would be useful just for future planning. And I'm really getting excited for that Belmont Library opening. Drive by it every day. It's getting closer and closer. Thanks to the team and the work you did.
Thank you, Commissioner. I'll be sure to follow up with that information.
Thank you.
Thank you. And I have to say, I mean, the art is beautiful, and I already talked about that. But I think for me, like, my favorite slide of this was slide 4, which was just showing the timeline, because I remember, like, at the very, very beginning when I was a commissioner, and the library bond passed, and like here, this is our big audacious timeline of how we're going to do all of these projects impacting so many of our library branches and building new ones and all of this, and just to see how much progress we've had and how far we've come and how close we are to that home stretch is pretty amazing. And so I'm really looking forward. I mean, the Northwest Library opening was fantastic and was so great, and I was glad to be joined by Commissioner Moyer and Brim Edwards there. But I'm also looking for 2026 with the East County Library, St. John's, Belmont. Like, it's really, I mean, it's just great, and I think we're ending so strong. Thank you, Maggie, for all the work that you have done on this. You have just been incredible with that, and Garrett in my office speaks so highly of you and just the incredible work that you do every single day. And I think that acknowledging the all-star companies who've really made a difference is great. I just want to rename them. Just Right Heating and Curling, Berry and Concrete, Southland, Boyder Brothers, Native Works, and Coria Landscape, and I know there were a few others that you mentioned as well. I think that these companies have really embraced not just like hitting the numbers, but really how to integrate within their businesses the values of workplace diversity and training and getting people into this pathway of really living wage jobs and a career path. So it was great. I'm so glad we've had this presentation today. Thank you all so very much, and keep up the good work. And we're here for all the openings that are coming in 26. So thank you.
Thank you.
All right, so that concludes today's meeting. The county is going to conduct a proclamation signing ceremony tomorrow, February 4th, from noon to 1 p.m. in the boardroom. A quorum of Multnomah County Board of Commissioners will attend, and we hope that you will consider attending or tuning in virtually. There being no further business, we are adjourned.